What are the charts saying ahead of arguably the biggest Fed meeting of the year? Joining us now is the technical analyst for the goldforecast.com, Gary Wagner. Gary, thanks so much for being back with us.
It's great to be here. Thank you very much.
So volatility in the gold market ahead of the Fed meeting next week. That's what we're seeing here. What range do you see gold trading in ahead of the potential rate hike?
Well, it's interesting because the anticipation right now is obviously that the Fed will implement liftoff. And as such, of course, we've had a lot of the belief in that being factored into the market, and we've seen gold under pressure. However, if we get liftoff as anticipated, we could see further erosion in gold. And the levels that I would really want to watch is a key level at 1061 and 1050, which are the most recent lows.
But Gary, what are your thoughts on commodities as a whole? How much longer can this downtrend continue in the sector?
Well, oil is the one that's leading the way. And right now, the issue that we have with oil is that production is outweighing demand on a daily basis by 1.5 million barrels per day. And so from the analyst's mouth, they're saying that there should be a glut of it throughout at least the end of next year. That obviously could continue to weigh commodity prices as a whole down.
And Gary, looking at the US dollar now, how much longer do you think the strength can continue?
Well, strength is not absolute, and neither is weakness. Now, we're looking at real resistance in the dollar index at 100. But if you go back historically, the dollar index has been as high as 120, and at one point it was as high as 140. So as we tackle with the dollar index at 100, technically speaking and historically based, there are higher levels that it could go to.
Well, speaking about history, let's look back at past rising interest rate cycles. Do you expect this normalization period potentially starting next week to be the same, or will markets react differently?
Well, all markets react differently. The key to liftoff, it's never been a question of if they're going to eventually raise rates, it's when, and then most importantly, how incremental will the raises be? My sense is that the Fed, as much as they've dragged their feet on an initial liftoff, and I don't anticipate, if they do raise rates, I don't anticipate more than 0.25% rise. I would be surprised if we get 2 rate hikes next year. In other words, I think that they're going to be very, very lackadaisical and very fluid in terms of how they raise rates, in terms of a time scale ramping up the rates. I wouldn't think they're going to go much higher real quick.
All right, Gary, we'll see what next week has in store. Thanks so much for joining us.
My pleasure. My pleasure. Have a great weekend.
And thank you for watching. We'll see you next week.